Thank you for watching ENECHANGE's financial result video for Q3 FY2025. I'm Tomoya Maruoka, CEO of ENECHANGE. This is the executive summary of today's earnings announcement. Q3 results continue to show strong performance. Q3 year-to-date revenue reached 45.8 billion yen, representing 23% year-on-year growth, exceeding the 15% growth target set out in our midterm plan. Operating profit amounted to 520 million yen and adjusted EBITDA reached 560 million yen, which already exceeds the upper end of our full-year forecast of 450 million yen. We are currently reviewing the full-year outlook and will disclose updates as appropriate. In addition, the 9-month net loss has narrowed to 30 million yen, placing full-year net profitability well within reach. If we look at the by solution area, both household and corporate electricity switching achieved growth of over 15% year-on-year, demonstrating solid performance. SaaS and development also performed well, posting a 30% year-on-year growth driven by progress in developing in the core system for new entrant electricity retailers, which we expect to become a future growth pillar. Let's begin with the company-wide performance and financial highlights. Revenue growth reached 23%, exceeding the 15% target in the midterm, as I mentioned earlier. Notably, we have made progress in transitioning to scalable business structure that enables profit growth while controlling organizational size and fixed costs. Fixed costs for both business units and headquarters declined 10 to 15% year-on-year basis, allowing revenue growth to translate directly into profit. As a result, 9-month operating profit reached 520 million yen, and operating profit for Q3 alone totaled more than 200 million yen, making a clear entry into the profit expansion phase. This profit expansion is also evident when separated business profit and headquarters costs, like chart here. Business profit improved by approximately 700 million yen, reached 1.2 billion yen, while headquarters costs were reduced to 70 million yen, which results in a significant improvement in overall profitability. Below the operating profit line, even after incorporating equity method investment losses from our EV joint venture, Mirai's ENECHANGE, the net loss narrowed to 30 million yen, as I mentioned in the summary, resulting in full-year net profitability well within reach. There have been no significant changes to our balance sheet, which remains stable, and we will continue to consider selective capital deployment while remaining mindful of ROE and ROIC. From here, we will review KPI by solution area. As noted earlier, total revenue increased 23% year-on-year. By solution, revenue grew 70% in household and 80% in corporate, and 30% in SaaS and development, all reflecting a solid performance. Turning first to the household segment, the primary driver of revenue growth was increased in electricity switching non-recurring revenue. The non-recurring revenue refers to commissions received from electricity retailers for customers' acquisition in our platform. This revenue increased 20% year-on-year as new entrant retailers strengthened online acquisition efforts and made greater use of our website. Regarding recurring revenue from continuing users, although the number of users declined slightly due to a revision of our acquisition strategy, improvement in ARPU driven by additional service sales resulted in a 6% increase. Next, regarding corporate electricity switching, there are two key points. First, switching non-recurring revenue, primarily from low voltage corporate customers, increased significantly more than 200%, although the absolute scale remains limited, mainly driven by enhancements to our sales team. Second, recurring revenue grew 10%, supported by an increase in the number of corporate customers who switch electricity in our platform. Looking at the business environment, the contract share of new entrant electricity retailers, who represent our main customer, expanded to 24%. While gradual, the customer acquisition by new entrants continues to recover, creating a favorable environment for our business. Looking at the SaaS and the system development, performance remained strong with 30% growth, supported by steady progress in developing the core system for new entrant electricity retailers, as well as additional development for existing solutions. Turning to Mirai's ENECHANGE, our EV joint venture, the number of installed destination chargers exceeded 10,000 units, and the total charging time increased by 12% Q-on-Q. Looking at the Japanese EV market landscape, the EV penetration within new car sales remained around 2.5% in 2025. However, a broad range of new EV models from both Japanese and international manufacturers is being introduced from the second half of 2025, and these are expected to contribute on a full year basis in 2026. Next, I will briefly update you on initiatives for the future growth. For our electricity switching comparison site, which is the one of the core business, a major update is scheduled for the first half of 2026, and the preparations are ongoing. In Q3, we launched ENECHANGE Easy Relocation Web Support, a line Japanese WhatsApp-based service that enables customers to complete moving-related procedures, including electricity and gas contracting, in a one-stop manner. We are also planning an update utilizing NILM technology, which is appliance disaggregation estimation technology, which identifies electricity usage by individual appliances based on household energy consumption data. These initiatives are aimed to enhance the usability ahead of the major site update in 2026. Regarding the core system development, the development of this solution is progressing as previously explained, with the partial revenue already recognized in Q3. For electricity procurement support, the sales activities and discussions towards matchmaking are ongoing. In the end, let's look at our EBITDA target in the midterm plan. The 9-month result delivered strong performance with adjusted EBITDA of 560 million yen, which already exceeds the FY2025 target illustrated here. We will continue to pursue steady progress towards FY2027 target of 1.25 billion yen and continue to deliver the strong performance. Thank you very much for watching today's presentation.